Hello everyone, I hope that you're doing well. Welcome to this lecture about SMT. SMT is by far one of the most complex concepts to truly understand. Many people think that SMT is just a pattern within price action. However, this is not the case. In today's lecture I will show to you how recognizing SMT is crucial in order to elevate your understanding of why the markets move the way they do. After watching this lecture, I promise that you will have achieved a new level of understanding when it comes to looking at the markets through an algorithmic perspective. With that being said, let's dive straight into today's lecture. Let us first define SMT. SMT stands for Smart Money T. The T has never really been defined by the inner circle trader. However, multiple things can be applied for the T, such as tool or technique. And thirdly, he even brought up the idea of the T standing for timing. You'll be able to hear this now.
Or anyway, the imbalance, or an order block, which there is no order block in here. So the imbalance it shades down into, then it fails to make a lower low when euro dollar makes a higher high. That is a crack in correlation. That is my SMT diversion, smart money technique or smart money tool. Like I said, I've never really settled on what the T stands for. It's been interchangeably used for tool or technique. But I guess it really could be smart money timing. You know, I guess you can add a third thing there to really confuse you. Oh, I see T, you so diabolical. But you settle on whatever you want it to mean. But whenever I say SMT, I'm looking at the relationships between important high.
So you have just witnessed a clip of ICT mentioning that SMT could stand for smart money timing. I personally believe that this is the correct use of the word SMT. During this lecture, I will explain to you why. Let us first define SMT. You now know what it stands for, however you don't know what it means. SMT is a cracking correlation between highly correlated or inversely correlated markets. What is important to note is that SMT is a confirmation of an already existing point of interest for a key market reversal. Secondly, SMT is a confirmation of a draw on liquidity being correct. SMT without narrative means nothing. A cracking correlation between two highly correlated or inversely correlated markets without narrative means nothing. Keep that in mind because that is crucial to understand. Let us take a look at the first visual representation of what SMT looks like within the markets. As you can see two correlated markets moving lower in tandem with one another. We can see that lower highs and lower lows are being made. Eventually, the markets reach a red line. This red line represents a key price level. This is our point of interest. At this point of interest, we can see that the market on the left is making a lower low, whilst the market on the right is making a higher low. Note that this is a cracking correlation, since these markets should be moving in tandem at all times. When they don't, that is SMT. This is occurring during our time of interest, inside of our point of interest. The point of interest being that key price level. After this, we can see the markets begin to make higher highs and higher lows. Order flow has now changed from a sell program into a buy program. We have turned from a bearish market into a bullish market. Let us now take a look at the opposing scenario, in which we can see two markets again, two correlated markets, and they are moving higher in tandem. They are both making higher highs and higher lows. Eventually the markets reach a red line. This red line represents our key price level, our point of interest. At this point of interest, what we can see is that the market on the left is making a higher high, whilst the market on the right is making a lower high. Note that this is occurring during our time of interest. We then see the markets change from a buy program into a sell program. We begin to make lower highs and lower lows. Order flow has changed from bullish order flow into bearish order flow. Let us now take a look at the third example of SMT. This SMT will be an inversely correlated markets SMT. On the left, you can see a market that's making higher highs and higher lows. It is in an uptrend. And on the right, you can see a market that's making lower highs and lower lows. It's in a downtrend. What we can see is that the market on the left eventually reaches a fat red line. This red line represents our point of interest, our key price level, of which we are looking to see whether or not a reversal will form. At the same time, we can see the market on the right dropping into a key price level, represented by the red line. Now we are monitoring to see whether or not a cracking correlation between these two inversely correlated markets will take place. What we can see is that the market on the left creates a higher high, whilst the market on the right creates a higher low. This right here is an SMT between these inversely correlated markets. They should move in the opposing manner of one another. But when they both do the same, meaning when they both show signs of strength, it's a sign of the first market being weak and the second market being strong. This right here shows to us that the time is right for a key market reversal to form. We then see the market on the left change from a buy program into a sell program, and the market on the right from a sell program into a buy program. In order to make it easier for you to know what markets to look at for SMT, I've created some schematics. Here you can see the correlated markets of Euro and GU. When looking at these markets, it's very important to note that these markets should move in tandem. When they don't, and that there's a cracking correlation at a key price level as outlined during this lecture, then that is SMT. If one market creates a higher high, but the other creates a lower high, and you have a bearish higher time frame bias, then that is SMT. For both Euro and SGU, you will be looking at the dollar index DXY as your inversely correlated market. For the index futures, the correlated markets are the Nasdaq, the S&P 500, and the Dow Jones. Please note that you should be using the futures contracts in order to spot the real SMTs. For the index futures, you will be paying attention to the dollar index DXY as well for your inversely correlated market. Let us now take a look at some real-time chart examples of SMT and its importance. First of all, you'll be looking at a clip from my market review from my mentorship on the 4th of July 2024 when it comes to the dollar index. Outside of that area, it's possible that we're going to draw outside of that. So as we're seeing here, close outside of it, and then I'm monitoring to see whether or not we're going to form a low in this area. As long as we do not trade below the April low, this is the scenario I'm monitoring. As you can see, we were anticipating higher prices on the dollar. The reason why we were anticipating higher prices was due to the fact that the dollar formed SMT relative to the April low between Euro and the dollar. That right there was a sign of strength, and that was for me the confirmation that we were likely going to form a bottom and expand towards the upside now. This is what has occurred throughout the month of June, as you can see. This provided many opportunities that we capitalized on throughout the weeks. The second instance of the importance of SMT will be showcased through the daily chart of Nasdaq. You will be watching a clip of my mentorship weekend review of the 30th of June 2024. Please pay close attention to this clip because you can learn a lot from it. I anticipate this consolidation that is taking place inside of this BC to end the moment that we begin to see SMT taking place on the lows right here between ES and Nasdaq. As you heard, we were looking for a cracking correlation to take place between Nasdaq and ES on the lows. This cracking correlation would confirm to us that we would likely expand towards the upside, creating new all-time highs. What you can see this week is that Nasdaq created a higher low relative to the previous week's low, whilst ES created a lower low. That right there was the SMT that we were anticipating and that we were looking for. As you can see, the past week we had a very bullish week, and it all came as a result of that SMT which was present on the lows. The main takeaway from this clip is that you need to understand that SMT confirms expansion. You have now witnessed the importance of SMT on the higher time frames. You have seen the SMT on the daily chart of the dollar, which was a monthly SMT. You have seen a daily SMT on the Nasdaq chart, and we're now going to take a look at a SMT that occurred during the afternoon session of the 5th of July 2024. What we can see here is the following. We can see that between 12:30 to 1, both Nasdaq SES formed a low. 12:30 to 1 is the final 30-minute cycle within our first 90-minute cycle of the afternoon session. We form the low and then the next 90-minute cycle opens up at 1 p.m. This 90-minute cycle can be divided in 3 30-minute cycles. What we see is that Nasdaq purchased the low that formed during the previous 30-minute cycle, whilst ES does not take out this low. So what do we see? We see that ES makes a higher low, whilst Nasdaq creates a lower low, inside of a point of interest during the right time of day. We then see the signs that confirm to us that a buy program is likely to take place, and I went long on Nasdaq. You have just seen the importance of SMT from the higher time frames all the way into the lower time frames. Understanding SMT is crucial, and therefore I want to showcase to you the importance of time cycles and SMT. Because you need to understand that every single SMT is a result of a cracking correlation between highly correlated or highly inversely correlated markets, their respective delivery relative to a previous time cycle, its high or low. Here you can see a screenshot from a lecture that I shared prior on my public YouTube channel. Inside of this image you can see that there are 3 time cycles. What's very important to note is that each time cycle has a high and low. What I want you to understand is that the time cycle is subjective, meaning this can be a yearly cycle, this can be a monthly cycle, this can be a weekly cycle, this can be a daily cycle, this can be a session cycle, it can be a 90-minute cycle, it can be a 30-minute cycle, whatever. You need to understand that time is fractal, and therefore what you put in the x-axis when it comes to the time period that you're paying attention to is up to your choice. However, what you need to understand is that SMT always occurs relative to a previous time cycle, meaning you always pay attention to the previous time cycle with respective high and low, and you see whether or not SMT is taking place right there. This can be fractalized all the way down into the minutes, and that is why it's so important to understand time cycles. I won't discuss them much in depth during this lecture because I already did prior during the lecture of which this screenshot is from. You can just search on my YouTube channel and you can find it. We have come to the end of today's lecture. I hope that you found it insightful and I hope that you elevated your level of understanding SMT, one of the most advanced concepts to understand when it comes to looking at the markets through an algorithmic perspective. If you enjoyed this lecture and you enjoyed the style of it, please leave a comment. I would highly appreciate it. I wish you all the best and I look forward to catching up with you soon. Be safe.